What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 17th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and seeing as I'm back from New York City from my visit to Consensus, I want to spend some time to go over what I haven't been able to talk about over the last few days, and that has been the craziness and price action we've seen for cryptocurrencies. So today I'm going to really try to cut out the noise, get down to the substance, and talk about a few key points that I really hope you can take away from this video. So without further ado, let's go ahead and dive right into it right after a quick message from our sponsor.
Okay. Oh. All right.
Alright, everyone, so this video is going to be jam-packed with a lot of major points that I want to get across here. The first one I want to talk about in regards to the kind of short-term view is what we talked about in my last video. So I did a real quick video when I was out of Consensus, and the major point that I kind of brought up as we were talking about Bitcoin rallying to 8,400 is that this rally wasn't substantial, and that it was very likely, again, even though I had been kind of calling for this to possibly happen around the 6K range, all fairness, I made a wrong call in that regard, that as this gets more and more parabolic, the correction gets sharper, and that it was right around the corner. Now, I'm not going to say that I was calling for it to happen yesterday or anything over the last 48 hours. It could have continued, but as you get higher and higher, you need to continue to raise your stop. And it was very clear that the market was overbought, guys. I mean, it doesn't matter what indicators you're looking at. If you're looking at the RSI, we were testing back to April ranges that we had seen before. NVT testing towards higher levels than where we were back in December of 2017. I mean, it was just absolutely parabolic in price. Again, guys, not much fundamental increase in volume transaction on the network. No serious fundamental news or breakthroughs that came out of Consensus. It was a little bit overdone. But let's go ahead and, kind of cut out the noise. We're not even really going to be using much indicators in this video, guys. We're going to be focusing in on two things that are very clear. Now we understand that parabolic corrections are intended to be parabolic run-ups tend to lead to sharp corrections. That's the first major point to take into account. And for those who might have bought up here at this range, the second thing I want to focus in on is something a little bit more on the longer term picture, and will help paint a picture as to where we might be going over the next few days and where we can find the next bottom in Bitcoin. Okay. So what we're going to do is we're going to turn on our drawings here for Bitcoin, and we're actually going to go ahead and take a look at history first. Now, again, history isn't always going to lead to the same results. It's completely fair to assess, but there is a lot we can gain from the previous correction. And interestingly enough, a relatively similar correlation as to how Bitcoin has performed off of its bottom to the recent peak that we saw, right? The peak we just saw back about 48 hours ago. So let's go ahead and take a look at it here. So if we take a look at the absolute low here from Bitcoin, which I think was priced in, if I get the candle here, it was at 198. You can see it up here in the top here at 198. That was the low that was set in. And if we also take the high that was established here at around $502, we get a rally of around 153%. Really nice substantial rally. This was back in the really mostly the fall of 2015. Was a pretty parabolic rally that we saw in Bitcoin. And interestingly enough, we saw a very similar thing. We'll see some similar correlations as we go throughout the video here. But you can see here how Bitcoin was able to break past what was resistance 2 times here and what was previous support. This green line here on the chart, we were able to make support on it and continue the rally up towards 500. And then following that, what was only about a 71 days worth of price action, in a matter of 7 days, we were able to close down the vast majority of those gains. Again, going back to my point here, guys, no matter if it's a complete correction, things tend to fall faster in Bitcoin than they do rise up, okay? So that's another key thing to take into mind, especially when we're talking about uptrends in markets, right? This is obviously some very bullish price action that we're seeing. But as we take a look here, from the peak to the bottom here, we had about a 41% correction. Now, there's a lot of significance with these 40% corrections in Bitcoin. In fact, we tend to find a consistency where the vast majority of corrections for Bitcoin are either 30% or 40%. And as we take a look here, I can show you guys the chart here. We have a great rally here, for example, in Bitcoin. I think it was around like 100% rally from the lows over here. As you can see, a 120% rally. But focusing in on the major point that we're discussing, if we take the peak here at around $780 for Bitcoin, 40% correction. Go over here. Take a look at some of these. Now, these are some of the 30% corrections that we can spot on the chart here. Again, going down 33%. Taking another one here from the, I really would like to take the range here rather than the peak of this volatile wicks. You can see another 30% correction. So again, going to the play here, once you start to get in the swing of upward movement and not downward movement, it becomes very predictable to understand where Bitcoin's going. It's usually around a 30 to 40% correction after nice rallies, right? So we've got all these different marks on the chart here, and right now, it looks like we have very similar price action to what happened here at the final bottoming of the market, right? We've had our 80 to 90% decline in price of Bitcoin from its highs over here throughout the year of 2018 and into 2019. And it looks like we might be repeating that very similar parabolic rise, sharp correction, right? Now, what would 40% lead us to? Well, 40% would lead us down to this green line at 5,000. This is a very key level because once we got up above the even of 5,000, as we were setting up higher levels, we continuously tested this level. And that's exactly what we did back here. Again, you can see before we entered really a big bulk of that fast moving price action, really going vertical in a sense, we had a test on that level. And we tested it multiple times after we came back down. So I would expect, the least I would expect is that we could come back down to this $5,000 level and test it multiple times. As we've seen this kind of parabolic rise in price action, this would line up perfectly with the previous lows. So as we go into the end of May and into early June, I would expect that we're going to come down here to this range and hold. I know a lot of people have a hard time believing that we could have, a rally up to these levels and see such a sharp correction. But again, I'm going to beat a dead horse here, guys. You know the point that I've made a million times in this video already. We can see it repeat over and over. And don't doubt that Bitcoin can repeat itself. It's a very, I think, as a cryptocurrency, or as a financial asset, it gives us, when it's in bull markets, a very predictable future. When we take a look back, for example, at the rally that we had in 2017, we called a lot of the tops in the market. We called it at 5,000, and we called it at 3,000. We talked about the retracement ranges that we were looking for. I pretty much picked the bottom on both of those rallies. That's something I will say proudly. But I'll say in bear markets, it's much more difficult to know where things are going. And in fact, it's usually just best to wait for that 80 to 90% retracement and then just probably average into the market, right? So again, that's where I usually kind of have assessed is the best way to play bear markets. And bull markets, it's pretty predictable. Now, some people, as we take a look here, in the 5 minute here in the short term, we're really having a breakdown here. I had on the Coinbase chart, I wish I had it here on my Bitstamp. There was pretty much a descending triangle, which is a breakdown pattern. This means the price is usually going to go lower. So now we're continuing downward on some of the price action we saw. Some people would say that you could possibly come down just to the blue line here, but that's only about a 28% correction. And if we're playing on the 30% mark, this is a pretty decent distance from the blue line here. So I'm pretty confident we're going to come down and see that 40% correction in a very good period of time. And I even gave it double the amount of time, seeing as this rally took about double the amount of time as it did previously in 2015. This time it took around 152 days. It took about 70-something days. And the previous time, I'm going to give this around 14 to 15 days for it to do its work, right? I don't think this is going to happen overnight. But again, it might be the oddball out on this, guys. I like to go off history. Now, why could we see such a sharp correction in cryptocurrency markets? Well, the one piece of news that actually is going to have a fundamental effect on markets is the New York Supreme Court and the Attorney General basically on the order of freezing Tether operations. Now, this is the official document if you want to go look through it. But the good news that a lot of people have been turning to is that basically the New York court had granted Bitfinex's motion to basically operate as normal for the next 90 days. The basic thing that they had ordered to freeze on was about their operations on lending Tether in this case, which is a huge liquidity provider to the cryptocurrency space. There's no doubt about it, guys. No matter if you think Tether's backed or not, it's a huge, huge booster to Bitcoin's price. Let's not lie about it. It's very, very fair to assess that. But as much as this is going to operate as normal for the next 90 days, I can tell you two things. A, Tether is probably not going to be expanding its supply too much. It's probably unlikely in that case, as they're starting to prepare for this freeze. The second thing as well is that this is going to mean that in 90 days, unless there is some resolution, there is going to be a huge cut to liquidity. And a lot of these things get priced in early on. Don't believe it that this is a huge thing, guys. Take a look at the volume in this market. Now, let's denominate that a lot of this volume overall in cryptocurrencies is probably wash trading, false reported volume, whatever you want to call it. But we can see that Tether, no matter if we were to denominate a lot of this volume, is the leading liquidity provider in this space. Okay? It provides so much liquidity to both altcoins and specifically Bitcoin. And there's an interesting correlation here that we can find if we take a look at Bitcoin's price and Tether here. Now, we have to kind of look at it in an interesting way, because what we're actually looking at here is the market cap, which is the Tether supply that's circulating. And we're also taking a look at Bitcoin's price in reverse, because we're taking a look at Tether priced in BTC. So as Tether increases comparative to Bitcoin, this means Bitcoin's price is going down. Okay. So let's take a look here at what happens when liquidity dries up on Tether. So throughout October to November of 2018, we saw more than $1 billion of Tether liquidity decrease out of the market cap. Okay, more than a third of its liquidity dry up in an instant. That's very significant for cryptocurrency markets. That's $1 billion that isn't circulating through and buying cryptocurrencies at any given time. $1 billion of everyday liquidity. And look what happened to the price afterwards. Now, you can say that this is, correlation isn't always causation, but I will say, guys, liquidity is the biggest thing to any market. It's inputs and outputs, as we've talked about on the channel with equity markets. And we saw a pretty stark correction here, okay? And this is also when it was rumored back then that a lot of this Bitfinex news had come out. A lot of the Tether backing had not been in place. I know some people as well who have talked about this, being old news, even though we heard about it much later on. So that this might have been priced in as we saw a decline in Tether. And then also, interestingly enough, when it became very clear that Tether's liquidity was increasing, meaning the supply of Tether is increasing, there's how Bitcoin's price started to act. Not to mention, here, when we have a huge bolster of liquidity after the breakout in April of increasing the Tether supply by hundreds of millions of dollars, we continue the rally. Again, could just be some correlation, guys. We don't know if that's the direct causer of this, but I will say, at the end of the day, if we do not get an increase in Tether, it is going to be a damper on crypto. And especially factoring in that in 9 days, it's going to they're probably going to have to freeze their operations of lending. It's going to drive a lot of what bolsters up price in this market. So I could see a 40% correction. I could see us coming down and testing this very key support range. How's it going to look over the next 24 hours? I don't know. Over the next few days, I think it's pretty clear that we could see in the next 2 weeks that we come back down to this range. And I can tell you all, anywhere between 5,000 to 5,500, I'm buying. I'm averaging down. I'm getting ready to prepare for this market run up. But I'm going to have to see price come down to a lower level. NVT, RSI, everything, it's telling me it's too overbought personally. As much as I love the cryptocurrency space, guys, as much as I love Bitcoin, and I know it could be worth $1 million one day, most likely, in the short term, this is too much for me. So again, not using any crazy indicators, using history, key levels of support and resistance, naked trading, even though I'm not naked, and also considering the very simple fact, guys, no matter what market it is, markets aren't invincible. They repeat history. And we know that parabolic price leads to sharp corrections. So those are some of the hopefully substantial things that you guys can take away from this video. And hopefully you guys know that you can keep an eye on the Tether supply. All this stuff is very transparent. You just got to dig through the numbers and keep an eye on it over time throughout your trading. But until the next video, everyone, I want to know what you all thought about this. Please leave a comment down below. If you guys liked it, please give it a thumbs up. I always love to get your guys' feedback. And if you guys have an opinion on this, leave it down in the comments down below, whether you agree with me or disagree with me. Let me know what your thoughts are. And overall, I hope you are having a fantastic week wherever you are. And I hope you have a great weekend as it's cutting into Friday. So without further ado, until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.